Bailout keeps the same managers, owners in place who made bad decisions at the expense of stealing from innocent taxpayers. Bankruptcy is much better because it transfers assets from bad owners and managers to better owners and managers.
Lepsza jest upadłość ze względu na to, że
from bad owners and managers to good owners. Bankruptcy can take a little bit of time, but it's necessary as an adjustment in economy. The assets are still there and will still function if they are valuable. And bailouts will only make it deeper and longer by keeping assets in the wrong hands. I also call for personal responsibility for politicians and government officials with vigorous prosecution of corruption, bribery, and fraud. With vigorous prosecution of corruption in the form of bribery, fraud, and malfeasance.
Politycy powinni ponosić kary za korupcję, za łapówki, oszustwa i malwersacje.
And I think it's necessary to re-examine the idea of corporate limited liability. 200 years ago, Scottish banks were some of the most secure in the world. The owners of those banks had to pay their depositors even if it came from their entirely from their own pockets, which caused them to be very much more careful in what they did with the depositors' money. In the long run, I think we need a devolution of power. And for this, I think there is no better example than the New Zealand model for wiping out debt by free market reforms. I will assert that every government of the world could get rid of its debt by selling assets. Also, there should be an end of the monopoly of power over finance. I think people should be given a choice in currency. Americans had a choice in currency briefly. These are the Liberty dollar. They are warehouse receipts for gold and silver. People should be allowed to choose to make contracts and to earn money and pay off debts in solid money if they want. But last year, at this time, the U.S. government said this was too much of a threat to the U.S. dollar. The government confiscated $20 million in their vaults and put them out of business. Then I would also not only end legal tender laws, but also the central bank itself and its control over interest rates and manipulation of markets. Now, I think I'm concluded, and I would wish to open up to any thoughts or questions.
Mam pytanie do pana profesora. W jakim stopniu pan uważa tezę tą za prawdziwą, że obecny kryzys został wywołany brakiem ryzyka?
I think that the crisis is due entirely to this removal of risk. Well, not entirely. There are multiple things. It's a very, very big player in this issue. The business cycles are accentuated by the government's interventions, by creation of money, and the creation of money is largely to fund these bubbles. They get risky malinvestment, it gets into trouble, they expand the money supply to try and prevent the collapse of those things. So it's part of it. The bad risk is going to cause a collapse, but they try to prevent that risk from happening by pumping up the money supply to try to hide the risky investments that have been made. And I think it just makes it longer and worse. Let me just add one more thing. The Austrian school of thought says that there may always be malinvestment, but readjustment is inevitable as a way to find out what consumers really value. The government tries to prevent that readjustment by pumping up an inflated economy, but that just makes it worse. Yes?
I'm not an economist, so maybe my question will be very simple, but how do we know that getting rid of central banks would be really better for the economy, since the central banks are part of the economy for the nearly last of the century? How do we know that this process would be actually better than it is now?
Good point. There's an interesting study done by George Selgin. Okay. Good. And, no, yeah, no. Okay, well, I'll tell you about it. Where there is more governmental intervention, George Selgin says there is much more likelihood of crisis. Where people are free in the market to take risk and assume responsibility, they are much more quick to respond to changes in consumer values and in good and bad investments. George Selgin did an extensive bit of research about the high degrees of regulation in these countries prior to 1933 and the low degrees of regulation in these countries prior to 1933. His conclusion was that for every 100 years of banking experience, these countries with a high degree of governmental intervention in banking had an average of 8 times as many banking crises as the banks with minimal or no banking regulation. I know it seems counterintuitive because we like to believe that regulators are serving us. But it turns out that regulators are always serving special interests at the expense of us. So the interests of the politicians and the regulators are their own interests rather than of the general public.
Co pan profesor sądzi o poglądzie, że bankructwo banków spowoduje run na banki? Run.
Good question. Why do people fear that their money isn't in the bank? Because we have banks practice a deceit. It's called fractional reserve banking for demand deposits. 100% reserve banking says if you deposit money into a bank, it's there for you. But fractional reserve banking authorizes banks to tell you that your money is there, when in fact only a small percentage is there. So people are kind of tricked into thinking that their money should be there, when in fact it isn't. So for demand deposits, I call this a deceit against the depositor. If you really want to be sure your money is there and never worry about it, banks should be obliged to have it there.